maybe it's the time to buy on a big drop that we're seeing today in another area of the market, and that is Chinese stocks, specifically some of the stocks that are now being targeted by the Chinese government. We've been talking a lot about this risk lately, in particular the Hang Seng down 4%, seeing a very, very sharp sell-off. And what this has to do with are two segments of Chinese stocks specifically and Chinese companies specifically. One of them has to do with education companies, where the Chinese government is coming in and imposing new regulations really on the ability of these companies to make a profit. And then there is also some questions, sort of similar to what we've seen in the West, actually, having to do with food delivery companies like Meituan, where the Chinese government is saying you have to pay your delivery drivers the minimum wage of the local municipality. And so those two buckets of groups are really getting hit hard today.
Yeah, good luck for anyone trying to pick the bottom in these, because you're essentially going up against the Chinese government. And some of the sell-offs have been very significant over the past month. Alibaba down 10% over the past month. You have Didi, you have Baidu down 15%, obviously major player in the online tech market in China. And I'm looking at Didi. The first trade on Didi when they went public at the end of June, 1665, closed on the first day of trading at 1414, about a $68 billion market cap. Today, it might open around $7 market cap, about $38 billion. It's been completely destroyed. And there's no bottom in sight, it appears.
The stock lost 21% on Friday. And you look at this chart, I mean, it's been a slow bleed. How many times have we come on in the morning and said, oh, Didi's off a couple percent here, a couple percent there? And now you're looking at a 32% loss in a week. This morning indicated to lose another 10% at the open. But just to go back to some of those, education names, ticker EDU, New Oriental Education, that stock lost 54% on Friday. It's down another 25% in pre-market, $2.93 stock. Ticker TAL, which is Tall Education Group, sort of been at the center of this storm. That stock lost 70% on Friday, is down another 30% in the pre-market trade. And so, you always ask, how does the stock fall 90%? Well, it loses 80%, and then it falls another 50%. So I think a reminder for these names that, pick whatever, you can lose $6 more per share in equity value with these. But I think we use the word visibility a lot because folks on our program, strategists, analysts, bleeds into our mind. Visibility, how are you thinking about it? I think for Chinese-based companies listed in the U.S., you essentially have none right now, right? And how much you can trust, these businesses' existence as a going concern.
Right, because what's the end game of the Chinese government?
Yeah, what is interesting, too,
they might not know. And certainly we don't know.
It's focused very much on pure play China names. I'm looking at Starbucks here. Big percentage of their business is, in fact, in China. Its stock is up about 12% over the past month. So at least the market is saying the bad trade, China-focused names, U.S. multinationals, maybe not much exposure here.
Yeah, speaking of another one, Tesla, after the close of trading, reporting its numbers, and it, of course, has China exposure, and it has had some struggles in China. All right.